If you have state source income from one of the other states or territories, it'll be subject to tax, as it normally would be. And you also mentioned it's particularly attractive to those who enjoy passive income, interest, dividends, capital gains. But if you have earned income, so for example, let's say you're a consultant and you sit in Puerto Rico, that income, that earned income would also be tax-free?
Yeah, well, basically, the earned income and the service income part is not free nor tax-free. There are tax benefits for that. And basically, that's another disposition that was previously under Act 20, now under Act 60. And this is the Export Service Act, or the export tax benefits, that basically allows a company or an individual to relocate to Puerto Rico or open a new company in Puerto Rico and export services from Puerto Rico to any part of the world. So if they provide the services while working in Puerto Rico, that you can say, hey, if you provided the services in Puerto Rico, that's Puerto Rico source income, as described by the Puerto Rico tax code and the U.S. tax code, that will be subject to a preferential tax rate of 4% tax. That is a flat tax of 4% tax. And if it is a company and the income that is generated is subject to the 4% tax, dividends paid by that income from that corporation are fully exempt. So that basically means that certainly if there is an owner-employee, you need to analyze if they need to have a reasonable compensation, that he needs to pay their Social Security, Medicare taxes, some kind of income taxes on his part. But certainly dividends paid from retained earnings accumulated from the export service activity are exempt at the individual's level. So one of the best strategies is certainly to, if the owner is a Puerto Rico bona fide resident and the corporation that provides the services is a Puerto Rico entity, dividends paid by that corporation are treated like Puerto Rico source income under the eyes of the IRS. So you will pay, or the company will pay 4% tax. Dividends received by the owner will be fully exempt at Puerto Rico and federal level, and the owner may pay some kind of income taxes on his W-2 income and any other income that he may generate. But in Puerto Rico, commonly you will find the combination of individuals investors as owners of the export service activity as well. So they may have dividends and interest from other sources that will be exempt in Puerto Rico. Probably interest and dividends paid by U.S. corporations or investors' accounts in the U.S. or any other part of the world will be subject to federal taxes. But in the case of capital gains, they may be exempt in Puerto Rico. And in the case of capital gains, it's very important to take into consideration what the IRS says is that the capital gains has principally two rules applicable to Puerto Rico residents. If they are private equity, it depends on the holding period, right? If you move to Puerto Rico and you hold that investment for 10 years before moving in, that doesn't mean that the gain that you realize after you just moved will be Puerto Rico source income, right? The IRS will say, hey, take a look back and let's calculate based on your holding period. So that's one of the principal errors that occurs. And the other side is the marketable securities that is based on fair market value as of the date of movement to Puerto Rico. So those individual investors decide, hey, if my investments were down at the time that I moved, I may have a loss or minimum gain in the U.S. and any appreciation after moving to Puerto Rico is the one that will be treated as Puerto Rico source income. So it's a matter of analyzing correctly each taxpayer and what they have on their pockets to see how it benefits each one of them. Yeah.
Okay, so if I get it, so you have a company that's properly domiciled in Puerto Rico, and the nature of its business is export, so it doesn't have domestic source income. Then the corporate tax will be 4%, right?
The corporate tax is 4% tax to the extent that it is export service.
It's export service. And if it engaged in some sort of Puerto Rico domestic activity, then what will be the corporate tax on that?
Well, it's fluctuates from 18.5 up to 37.5. So it's dramatically, they change. Yeah.
Okay. Understood. So I think that's pretty clear. So it's very attractive to those on so-called passive income, particularly capital gains. If it's a company, you just need to make sure that company is internationally focused, not domestic to Puerto Rico, and you get that 4%. But the dividends that are derived from it would also be tax-free, at least at the federal level. Okay.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.